Hello, everyone. How is everyone doing today? It is July 2nd, 2026, and it is now in the afternoon, and we are coming into the close of the day, and the stock market is getting absolutely kabooshed, getting slammed today. We had a nice rally into the opening bell after the 8:30 a.m. Uh, announcement. News came out on the jobs report. The jobs report, the unemployment report, comes out uh, on the first Friday of every month. And since the first Friday of this month is a holiday, as tomorrow the markets are closed, the banks are closed, the bond market is closed, and pretty much everybody's off for the observed 4th of July holiday. Tomorrow is the observed 4th of July observed day, and then the 4th of July is Saturday. But tomorrow, banks are closed, markets are closed, bond market's closed, post office is closed. Newman can take a day off, and so you had the jobs report released today, Thursday, instead of the first Friday of every month. And when that news came out, it showed that the jobs increased lower than what they expected. And with all that, the unemployment rate actually went down. So the jobs increased by less than expected, and the unemployment rate went down. And that is very good news for stocks. Hold on one second. Let me look up the exact numbers here. Did I delete this? Okay, so yeah, here we go. So the jobs came in for June. We added 57,000 jobs, and the consensus was for 115,000 jobs. So we missed the consensus estimate by half, and the unemployment ticked down to 4.2% in the process, which is weird, but it happened. But fewer jobs added than expectations means that the inflationary pressures are less than previously expected, and so that is good news for the stock market, because less inflationary pressures with less jobs created means that rates may not go as high as previously expected. So there's that good news is bad news is good news dynamic, and that pushed stocks higher when that news came out. And all that was very bullish for the markets. But as the day has gone on, another force has come into play into the markets. And that force is something called the yen carry trade. And it is a little bit complex, but we saw this play out before. The clearest real world example for when the yen carry trade really had an effect on markets was in early August 2024. And what happened in August 2024 was the Bank of Japan hiked interest rates while the Fed signaled interest rate cuts. And when that news came out, when the Bank of Japan hiked interest rates as Powell and the Fed were pushing to cut interest rates, that created a big sell-off in stocks, and that was all a result of the yen carry trade. Now, it's been a while since August 2024, so you may have heard about the yen carry trade on the news, but it is kind of a complex topic. It's kind of tricky to understand, but it has a big impact on markets in today's world because the yen carry trade has become a dominant the yen carry trade has become a dominant trade across the globe. And it has become a main driving force for the markets. And we don't think about it that often because it just does its own thing. It's not often disturbed. But when something happens where Japanese interest rates can go up and U.S. interest rates can come down and the value of the yen can go up and up sharply. So it's not just the direction of the yen that can affect the yen carry trade. When the yen goes up, that can affect the yen carry trade and cause stocks to sell off, which I will explain in more detail in a moment. But it is the velocity of the up move in the yen that can cause stocks to sell off very aggressively as well. So to explain this better, I asked Claude to give me a summary of what exactly I asked to give a description of the yen carry trade and explain the important dynamics of how and why when the yen rises, stocks sell off. So this is what it said, because it gave a very good explanation, and I think it gave a better explanation than I could probably give. The yen carry trade is one of the largest, most persistent trades in global finance. And the mechanism connecting it to stock sell-off is worth laying out carefully. Partly because the direction and causality is as you lay out. When the yen rallies, it creates a sell-off in risk assets, such as stocks. Okay. The trade exploits the interest rate gap that I just described, where you have higher U.S. interest rates and lower Japanese interest rates. So you have interest rates in Japan that are at very low levels. Okay, so for many, many, many years, decades, the Japanese interest rates have been close to zero. Right now, the 2-year JGB is at about 1.41%. And the 10-year JGB is about 2.7%. Now, when you compare those rates to US rates, our 2-year interest rate is at 4.13%. So there's a big difference there between 4.13% and 1.41%. That's about 272 basis points as of the time looking up these numbers. So you can borrow money on one currency for 1.4%, convert it to US dollars, and take that money and lend it out. Take that money and then borrow. You borrow with that interest rate. You take the money. This is why it's complex. Okay, so basically, you borrow money from the yen using yen at 1.41%, and then you convert it to US dollars, and then you convert that money into risk assets like bonds, okay, like stocks and so on and so forth, and then you're getting in treasury notes and so on and so forth. And then you're getting a higher rate of return, around 4.13%. And just by buying treasury notes after moving money into dollars, you're getting, 272 basis points in profit. And that is essentially free money. And what these various hedge funds do is, you have that basis between the yen interest rates and the United States interest rates. And if you're getting 272 basis points of basically free money in the example of the 2-year interest rate, well, we're a hedge fund. We have a good relationship with a bank. Why don't we leverage up? Why don't we get 5 to 1? Okay, leverage 10 to 1. How about 20 to 1? Okay, we'll put up money for collateral, and then we could put the money in treasury notes and get that easy 272 basis points in profits. But let's also put the money into more risky, even more volatile assets. Let's buy stocks with it, okay? We'll put it in stocks that have dividends, but we want to make as much money as possible, so we'll leverage up this bet and basically get that free money of 272 basis points, leverage it up, and then buy stocks with it. And we'll do other stuff like buy call options and so on and so forth. And so all this stuff is happening. It's a big trade that happens that basically fuels the alpha around the world. And so when they get that free money of 272 basis points in this example, they will then leverage that up and buy various stocks and do various strategies with options and so on and so forth. And when you have an event where the yen, which is the currency that they're borrowing, goes up, that can create a lot of problems. And the reason why is because eventually with the yen carry trade, you have to go back and buy that. You have to go and basically close out the trade by buy back the yen. You have to close out the trade with yen and doing that, you're going to have to buy back the yen. So if the value of the yen goes up, that means your collateral goes away. And when you get a big move up and a sharp, aggressive move up, that means that the funds that have these hedge funds that have the yen carry trade going have to hedge off their bet by selling stocks and selling risk assets. And that can create a snowball effect. So with this big move up in the yen, and we've seen this before, like I said earlier with the August 2024 example, when you get a big move up in the yen, and it's a sharp, fast move, and this time, this sharp, fast move is, based on news, and basically the news is that Japan, and I think it's the Bank of Japan, says that they're not going to give, they may not give guidance in the future when they're going to intervene to buy and support the yen currency in the future. And the fact that they are not going to give guidance to future intervention of buying and supporting the yen, well, that makes investors very, sketchy that they won't have future guidance or future ideas of when they can sell the yen and get out of the trade and so forth. So it's that news is kind of scaring the market and causing the yen to rally on that news. So where does this go from here? I don't know. But this sharp move that we're seeing in the yen today, and you have two big moves. You have this move here that started early in the morning and then kind of increased, more and more, and then you had this big move here. And this is causing the stock market to really sell off here. And another thing is that there's other dynamics that are taking place at the end of Tuesday was the end of the quarter, and so many fund managers came into the quarter buying stocks that have had a fantastic quarter, like the semiconductors, the chip stocks, and they want to show their investors that they are really super smart and that they can buy stocks that go up, 400% in a couple months. So they go and they buy the semiconductor stocks, and you can see it very well here in the S&P. This big move up on Tuesday was window dressing. Basically, these fund managers buying these buying stocks that have been doing so well. And when we look at the Nasdaq on Wednesday, Tuesday, you see a really big move here. It started on Sunday evening. It happened on Monday, and then it went on for Tuesday. And let's take a look at the semiconductor ETF here. I just want to see something here. Yeah. Okay. So you can see it here. Monday and Tuesday, this big up move in the semiconductors. And I'll take a look also at DRAM, which is the memory stock ETF. We can see this big up move Tuesday, Wednesday. Boom. Or Monday and Tuesday. This big up move and all these names. So that was the window dressing. And then the reversal once the new quarter started, they sold them. So that has added to the selling pressure in the market. After the quarter starts, they sell the stocks that they previously bought into the end of the quarter for window dressing. And today, the yen carry trade is adding more selling pressure to the market. So as I speak, this market is really, the selling is really picking up here. You can see it very clearly on this 1 hour chart on the S&P futures. It's really picking up. We're taking out previous swing lows, and I think as long as you have the yen rallying the way it is, I don't see this sell-off ending, at least today. It seems like it's got a lot of gusto to the downside. Today is a classic outside reversal day. So you basically trade outside of the previous trading session's highs and lows. So you go back to the previous trade session, the highs and the lows of the day, and we took out the previous highs and we're taking out the previous lows. That's an outside day, and we traded up. It looks like it was going to be a trend day higher, but then we reversed and we're trading down, and we just followed. I think it's going to last for the next 2 hours of the trading day. If you are day trading or looking to do any short-term trades as we go into the closing bell, if you're looking to buy this this downward move in the market, let's zoom in on a more short-term chart. So now we can see it a little better. This is a 2-minute chart, so each bar is 2 minutes. You can see this big reversal right here, much better. And now you have this bona fide downtrend for the day. If you're looking to buy this, looking for a reversal, you're out of your mind. Okay, you're basically gonna kill yourself. Now, could we get a reversal? Yes, but basically what I would be doing is you have 2 hours left until a 3-day weekend, and you have a bona fide outside day, reversal day, trend down now, intraday trend down. Look to short a bounce. You get a bounce in the S&Ps or the NASDAQ, the Qs, the SPY. Basically, you look to short that bounce and hold it into the close. And that is the best short-term day trade type of trade I would do. Let's take a look at the NASDAQ futures, then we'll take a look at the SPY and the Qs to see a better picture. But this is the NASDAQ futures. You can see you're getting these like intermediate bounces here, but they keep getting sold. They keep getting sold. And we've seen it multiple times today. Let's zoom in here from when the selling began, and you can see here how you get these little bounces. You get a bounce here, you get a bounce here, you get a bounce here, you get a bounce here. All these bounces keep getting sold, and we even get a little bounce right here. I would sell it. Now let's take a look at the SPY and the Qs, which is basically a different way of looking at the same thing, in my opinion. It's all the same. They should just convert everything to one symbol. It gets really confusing. The S&Ps, the SPY, the NASDAQ, the Qs, it's all the same. I don't know. These exchanges, they're out for money. They have to make it very complicated. They have to add all these symbols. Anyways, and they need to split stocks too. That's another thing I have. Okay, so anyways, let's zoom in here on the SPY. You can see the same picture as before by looking at the S&P futures. But I would look to, any one of these bounces you can look to short. And this is a trade just for today. Nothing long term, just like short a bounce and short sell it into the close. You You can actually, you don't need any oscillators or any indicators for this. You could go and, draw a line. You draw what is known as a diagonal line. Okay. You don't need any indicators, oscillators, or tools, or gizmos, or gadgets. What you need is your hand. And you take your hand, you draw a diagonal line, and it goes down from the top down to the lower part of the chart. And you basically draw this little line here. It doesn't have to be perfect, you get the point. Basically, when it comes to this line, when it hits that line, you can short sell it and then look for it to go lower. That's the trade right here. You don't have to make it too complicated. We're at the line right now. I wonder if it's be interesting because I'm speaking out loud as it's happening. I wonder if it now is when you can short sell it if it goes down. Let's watch this play out. Because we've gotten a little bounce as I've been talking. Okay? Could we bounce more? Of course. But we're hitting that line, that diagonal line that I made. Very highly technical line. Okay? I paid $5,000 for this indicator from someone. And now I'm created the indicator by drawing that line, that diagonal line. Oh, we're busted through it. Ooh, maybe I wasted $5,000 on that indicator. No, but I think you should short sell every bounce higher and then look for that drop down lower. So now that we're above that line, this is a good point. You got a green bar in that downtrending line. Let's see if it goes down. Come on. Watch this market just rip rally right when I finally come on air and indicate that it's ready to go down. Watch this thing just rip right into the close. You just watch it. It's due to happen now. Right when I say you're out of your mind to buy this reversal, to buy and look for a reversal, watch this market reverse. It's just, that's why I think to myself, making these videos, the number of times when I actually am going to go out and say something and the market's going to do the exact opposite, it's going to happen over and over and over again. I go on talking about for 20 minutes or whatever about how you got a outside reversal day, you got to trend down, and you got to look for a rally to short sell. If you buy in this dip looking for a reversal, you're out of your mind. And now look at this market just reverse. It's like the market gods. This is the whole thing about talking about the markets. In a video. I know I'm trying to help people, and people say that this helps, but maybe the best way of helping people is just you just listen to me and you do the exact opposite. If I say to do something, you do the opposite. Specifically on day trades, on short-term trades, you do the opposite. Okay? You got to do the opposite. Costanza principle all the way. You do the opposite of your natural instinct. I'll tell you what my natural instinct is, and then you, the investor, the listener, you should just do the opposite. I think that is the best service that I could provide. And basically, I'll tell you guys everything that I think, and I'll give you my natural instinct, and then the service will have like Bradley's natural instinct and have like an explanation of my natural instinct of what the market will do. And then it will come out with a trade ideas that are the opposite of my natural instinct. And then you guys follow those trade ideas. That would be a great service. Because if you did the opposite, when I started talking, when I first came on air, you would be up. Like you could have bought the SPY right down there, right around 740. Now it's at 742. It's rallied over two handles. Since I said you got to short sell. You're out of your mind if you buy here. It's rallied $2. You could scalp out now and make some big money. I think that's it. I basically have like maybe I can make like something with AI where it has, it generates my natural instinct and an explanation of, Bradley says this. Bradley thinks that. Bradley expects this to happen with the market. And then like an auto generation of like a list of trade ideas based on the opposite of my natural instinct. Look at this thing move. Everything's the opposite. This is why I didn't want to do a YouTube channel, because I am wrong all the time. Like, I think that I know so much, and the market is constantly proving me how much mistakes I make. And that goes to to being successful in the market. How much you make and how much you lose in a trade is much more important than how often you're right or wrong. Because this is beautiful. This is how it is. This is the market. And here's the thing now. You're now breaking out. Let's get rid of this stupid white line. God almighty. It's making me sick looking at it. Now you have a higher high, okay? So you have, lower, you continuously have lower highs in these rallies. Lower high, sorry, damn it. Let me get rid of this, okay. Let me zoom back in here. Okay, so you consistently have, lower highs, lower high, and then here, you have a lower high here, but look, now we've actually bounced back above this lower high. That confirms that I'm completely wrong, and the rally's really got some legs now. So, this is just a crazy day. So we'll see if this rally continues, or this is a bounce that is going to continue. Now let's take a look at take a look. We move these lines here, and let's take a look at the Qs. You see a big bounce here in the Qs here, and we zoom in here on the opening bell right after the jobs report. You got a nice rally in the Qs. After the opening bell, following the jobs report that I discussed earlier, and then we've gotten consistent selling all day long. A nice little bounce here at the 11:30 hour, and we have continued selling all day long now. So this is the best bounce that we've had since the 11:30 hour. And the big question is does this bounce materialize into a big reversal? Or does this selling trend down that we've had all day since the 10 o'clock hour continue? And I honestly don't know now. Yeah, I thought I had a lot of conviction that this was going to rally a little bit and it gets smashed lower, but this has got some gusto higher right now on the Qs and the SPY as well that we looked at earlier. So we'll see. And if you had a service that did the opposite of my natural instinct, you'd be making a lot of money right now. if we zoom in here a little more, what's interesting is you see this up move. You see how the volume's increasing a little bit, but it's equal to where it was. You can compare the volume levels to where it was before, and you have some nice volume here. You have nice volume here. The volume's looking pretty decent in this bar so far, which is good. And its volume's equal to this level here. So you're getting. Let's see here. What's interesting is you got a lower price. You had a lower price here than here, but the volume was lower. See that? That's interesting. So you got a nice volume divergence there. And if you look at a momentum oscillator, it would show the same thing. So now you have the volume increasing from where it was at its lows here. Yeah, so you have a nice reversal here. But to keep everything in context, you're still in this intraday trend down. So you can always have someone come in and smash it lower, like I discussed a little earlier. You get a big volume push up and we go down, and all bets are off. This is why it's so tricky to day trade. You have to, for the retail investor, I firmly believe that you have to have, you can trade intraday, but if you really want to make real money as a retail investor, you have to have a long-term outlook, because things just change so fast during the day. You can do analysis on the market for one thing, and then look, boom, something else happens. You could be wrong, and then things change, and then you're right, and then you're wrong. And who you're competing against, they have billions and billions of dollars going against you. So there was some news out about how Robinhood is allowing retail investors to make trading bots that can they can make a trading bot on an LLM, plug it into Robinhood, and they can do automated trading. I think that it's going to be very doable, and as time goes on, very easy to make bots that trade through the Robinhood app, but I don't see it. I don't see, for the most part, those bots making any money. I think it's just too difficult. And even when you get a bot that makes money, if it could be working really well, and then when market conditions change, it blows out. So I would stay away from it. I think from a retail investor point of view, you make money by using your edge as an individual person, doing things like, research on your own, what is known as, buy what you know, buy what you understand, find themes or ideas that Wall Street's missing and not paying attention to. And you can get in before that stuff happens and then make a lot of money using longer time frames. Because if you're going to do these bots, you're going to be pushed to do specific short-term time frames. And the people that you're competing against will crush you. You're like a little ant compared to an elephant. Okay? Most of these trading bots, algorithms, and so forth, they're not trading on direction of stocks. They're not picking a direction on a stock. They are doing various complex strategies, like this stuff is very complex. They do stat arb, vol dispersions, uh, volatility, kurtosis, arbitrage, all types of crazy, crazy strategies that I just don't think that you're going to be able to do on Claude, building a bot that plugs into um, Robinhood. It's just. I think it's a very industrious, entrepreneurial idea. I just don't know if it will work, um, because like even today, if you like programmed a bot, what are the chances that you programmed a condition that if the yen moves a certain amount in a certain amount of time, you could go and then stop your losses and hedge off your portfolio by doing a trade by shorting two times the QQQ or something like that. That is probably a condition or a parameter that you would not have thought of, but on a day like today, it would be, you'd be losing money or something like that. Now, as far as automatic trading, if you make a bot that looks to trade on longer term time frames, specifically based on technical indicators, I think that is I think that's the most doable, um, the most doable bot that could be designed that will make money for a retail investor if you have that longer term time frame. So if you, a perfect example is this, like a trader like Richard Dennis who created the Turtles. Basically, he was a trend follower and basically traded futures and looked to trade using higher time frames, and traded and found commodities in particular and various futures that traded basically trading trends, and they would look for various trends that were going on, things that were moving in trends, and they would have programmed trading where if a certain thing moved to a certain, moving average or like a Bollinger Band or something like that, they would buy it and they would put in a stop loss, but they would not look to short-term trade it. They would look to hold it for a long time. If you develop a bot that is based on, that uses technical indicators, that looks to capture trend moves and uses a higher time frame, where basically you're mimicking a technical trend following trader, I think that's your best bet if you're going to build a bot now with the latest technology that could be used for Robinhood. And I think it can be also used for other brokers as well in the foreseeable future. So it's something that's coming. But focus on longer time frames where you capture long-term trends in a stock or a commodity or so forth. So like you can build a scanner that looks for stocks that are in a trend, and you can define that by stocks above their 20-day moving average for X amount of days and have an RSI of above 80 or whatever. And those stocks will come up that are in like a bona fide trend, like a Micron. And you can say, okay, Micron is broken out of these levels. It was in a consolidation phase, but it keeps making higher highs and higher lows. And it went through a period here where it wasn't trending, it was sideways. but the longer term is a bona fide trend. Um, and basically, what you could do is buy when it hits a certain moving average. Like you could say buy when it hits the 20-day moving average. You bought some here, and guess what? Today you'd get stopped out because it broke through the 20-day. Boom, that's your trade. It's a lot easier. Let me take a look at okay, yeah. So basically, like this is a Micron on a different chart here. This chart uses an RSI, and it uses just looks at moving average and volume, and basically like you can make a trading system where you buy a pullback to the 10-day, and then if it breaks below the 20-day, you get sold out. So you could have been long a stock like Micron, and you would actually be sold out today and stopped out today as it breaks the 20-day. And I think the stock could keep going lower. I mean, we could easily go to the 50-day. And it may be going into a period of range contraction as sideways action, as I've talked about recently. And you can see it very clear here in the momentum, as you see here, very clear here on the RSI. And I've talked about the momentum dying off in a stock like Micron. But you see it very clear here with the RSI as it makes these highs above 80 multiple times. Every time it makes highs, the RSI goes above 80. And this time right here, we hit all-time highs in Micron, and we didn't get above 80 in the RSI. That is a clear divergence and a clear sell signal. So I've showed this divergence in momentum in other oscillators, but I've not shown this divergence in momentum in the RSI, but you can clearly see it here. No new highs. We get above 80, so we can keep going higher at each pullback. But this time, we make new highs, and we don't make new highs in the RSI. So, how low can we go? That is a question that I've been getting with Micron. Well, this oscillator has fallen pretty fast. We're down to 48 now in the RSI. So we've gone very quickly from being overbought to being in the process of going to oversold. We're at 48 here. Could we go to 20? Yeah, easily. And, because the interesting thing about Micron is that it's very extended. It's had a huge run up. It's overdue for a sell-off. It's overdue for a correction. It's overdue to have some type of basing sideways action. So, you get a big sell-off in a stock like Micron. It's actually, if you're long-term bullish on Micron, which I think if you're not, you're crazy. I really do believe that. Because there is nothing to indicate that a stock like Micron is in a bubble by any stretch of the imagination. I saw something yesterday that showed that the move up in semiconductor stocks, here it is exactly equal to the increase in semiconductor stocks earnings. So there is no multiple expansion in semiconductor stocks, specifically memory stocks. It's all appreciation in the stock price as the earnings are going up. So you're not getting any multiple expansion. So that means that it's not overvalued by any stretch of the imagination. It's just moving up with its earnings. So you see a dip like this, you see a pullback, a sell-off like this, a stock like Micron, you got to think to yourself, okay, I got to buy some. I think the 50-day is a decent level where you can look to buy some Micron stock. And another indicator is, I don't think personally that the RSI will get to 20 with Micron. It can easily do that. That's if it gets super, super oversold. But a more realistic point to look on an RSI indicator to where you would like to buy Micron is where the previous lows were. Okay, you look back at the lows in the RSI in late March, in November, in August, and that level is in the 30s, right around 35. So could Micron easily go to RSI of 20? Yes, but I think it's more advantageous if you get in before it bottoms. If you buy when the stock hits its 50-day and the RSI gets to about 35. That's a trigger to buy, in my opinion. When you get one or the other, or both. In a perfect world, you get both. Okay? Yeah. Micron trading down to 850, the RSI gets to 35, 34, boom. Then you buy some shares. But it's good to have a general idea and have an indicator to give you that general idea of when to make the move. So for a stock like Micron, that would be the level to look to buy the stock. So that's a question that I've been getting, and I think 850, and when the RSI is at 35 or so, that would be where I would look to buy. Let's see here. Let's take a look at some other charts here. And the lower Bollinger Band on the daily chart of Micron is right around 850. So that's great to see. And you look at these two oscillators, the 310 oscillator and the RSI, and they are very oversold at this point. And as I've discussed earlier, you had this divergence in the slow line. It has continued to make lower highs and continue to trend lower as Micron made all-time highs, and that reflects just like the RSI had a divergence in the RSI. They made highs in the RSI as the stock made all-time highs, and then just like the RSI made lower highs as the stock made new all-time highs. That's that divergence in the momentum. So you see it in multiple oscillators, not just one, but you usually look to see it across multiple oscillators. And that's why I like to look at more than just one oscillator. I look at rate of change, I look at the 310 oscillator, and then I look at the RSI oscillator, which is right here. But if you look, that's another chart. Where's the other chart I want to look at? Here's the chart I want to look at, go back to. So you have this high in the relative strength indicator, and then highs in the stock, and that's fine. That means it's going to keep going higher, and you should buy any pullback. But then at this point, you had the all-time high in the stock, a new all-time high in the stock, and then lower highs in the relative strength. That divergence is a sell signal. And then if you look, you go back to the other chart, you see how you have new all-time highs in the stock, and the stock got above the upper Bollinger Band for the real first time. You saw in these instances when the stock went to highs before, it really didn't get above the upper Bollinger Band, but it did this time. That's interesting. And that's a classic sign of a buy climax. And so, you got that lower high in the oscillators, both the fast line, the slow line, and in the rate of change, and in the RSI and the other chart. And that showed the falling momentum, and momentum always precedes price. That's one of the key tenets of technical analysis. And then you got that selling off. So in the other chart, the 50-day moving average is around 850. The lower Bollinger Band is at 850. So the lower Bollinger Band at 850 confirms the other chart of 850 at the 50-day as a good spot to look to buy. So I would say 850 is the best level when you look at both charts to buy. And as far as all the oscillators, I still think that looking for a 33, 35 something RSI level as a trigger to buy a stock like Micron on the sell-off is a good level. So let's go back to this chart and basically looking around to see what else is going on today. This is a let's go back to take a look at the Qs in the SPY. As we'll see how my prediction is playing out. As I said that you should short sell this rally here, and so far that prediction has turned out to be completely wrong. I said it was nuts if you bought that low right after the 2 o'clock hour. I said, yeah, you should have bought that low. Don't look for a reversal. And since that time, we have been going straight up and continue to go straight up after I went on to talk about Micron. So basically, if we take that philosophy of doing the opposite of my natural instinct, that would mean short selling Micron as it crosses the 50-day moving average. I guess, I don't know. But it would be cool if like a large language model, AI, came up with traded ideas based on the opposite of my natural instinct. I think that trading system would do very well. I guess short selling after it crosses the 50-day would be an idea. I don't know. But markets continue to reverse. Now every dip bit gets bought. So now we've completely changed. We had every rally getting sold, and now you're getting higher highs and now higher lows. So the dips are getting bought. Let's take a look at the SPY. see the same concept in this chart. See, the dips are getting bought now. So everything's completely reversed. And just watch this market be positive at the end of the day. Like watch it. I don't know if you can get there with with the Nasdaq because we're down over 2% now. So it's going to take a lot to get a huge rally in the Nasdaq to be green on the day. But the S&P is only down by 0.45% right there. So I think that you could get, it's possible that you could get a rally that's big enough to push the S&P up on the day. It'll be interesting to see. And of course, this rally could just be a perfect setup for what I outlined before. And we get the markets get smashed lower into the closing bell, and this is the perfect opportunity to short sell. You just don't know. That's why I do not encourage day trading. I'm looking at volatility right now. It got hit hard just recently, and that's basically what's going on right now. And basically, as we are looking at the SPY here, basically, I earlier pointed out that this rally could be the start of something like a real bounce higher, reversal at the end of the day. So you get two reversals in a single day, which is very rare, but it can happen. Or this rally is a optimal opportunity to short. And what I said was I would have looked to have shorted right here, right around, I don't know, 741.80, 742, and the SPY and the Qs as well continued to just go up, and I looked like such a moron as I said, "Oh yeah, you got a short sell. We're at a short intraday trend down. It bounced here." I'm like, this bounce is a perfect short. And then, boom, I said that the market was going to get cabooshed and get sold down as we went into the closing bell. But yet, the entire dynamic has changed where you're now breaking out above previous intraday highs or previous intraday lower highs, and you're making new higher highs intraday and higher lows. You have a trend reversal. We have a bona fide trend reversal. We have a higher high and a higher low in the intraday trend. Now keep all this in the context. This is a 2-minute bar chart, meaning that each bar is 2 minutes. Okay? And this is just today. Okay? And so, keep everything with a grain of salt. You get a big seller that comes in and boom, everything changes. But at this scale, the same laws of trend change apply. You have a higher high and a higher low, and you broke through these previous upswings here, which basically on this small, tiny time frame constitutes a new uptrend. So for a short-term scalp, and it's important to keep everything in context, on a short-term scalp, this intraday downtrend that we have seen is now over. And this is a reversal higher, and it looks like it's got some gusto to the upside as I'm talking. It's getting momentum to the upside. Let's take a look at the Qs, and we'll look for confirmation that the same patterns are holding up with the Qs as the SPY. Get this little pullback, these red bars, and they're getting bought just like the SPY. Beautiful. And you have higher highs, higher lows, everything's looking up. So we still at this point on these small time frames, we need more confirmation. We have a higher high and a higher low, which basically now negates this downtrend that we've had all day. We broke above these key levels here. I think it's okay to buy this dip, but this little dip that we've had, but you need for it to go above. If it goes above this previous high of 712.37, you can hold the trade, but it's got to hold this higher low, which is 710.28. So all these rules of trend analysis and bar chart analysis that I'm using on a 2-minute time frame, you can use it to any time frame you please. And with that said, I want to go back and take a look at Micron. So I'm going to take a look at the longer term Micron chart here. And I have gotten questions from people asking, okay, well, Micron's had such a big up move. When do I buy it? Can I buy it, at all-time highs? And if it sells off, which it's starting to do as I speak, when do I step in and buy it? So, to answer the question, I'm going to first zoom out and take a look at this very long-term chart on Micron. And this is a weekly chart, meaning that each bar is a week. And this chart goes back 5 years. And basically you can see when you zoom out the way we are here, that the stock really didn't do anything for a long time. And it was basically trading below $100 a share for many years. And just recently, with the explosion of AI and the current memory bottleneck that is going on right now, Micron has made a huge move higher. And basically, we have been hugging this upward channel on the Bollinger Band for many months now. And just this week, we actually have detached from it and are coming down. On this weekly chart, the 20-week moving average is at 649. It is possible, very possible, that you could have a retracement back to 649. I don't know if that will happen. I'm doubtful that will happen because so far you're not getting any multiple expansion with Micron. So the stock chart is, at this point, is based almost solely on the earnings from Micron. So I don't think you're going to get a big downward move in Micron's earnings anytime soon. So I don't think you're going to get a big downward move in the stock price of that proportion. But from a technical standpoint, short-term mean reversion, don't count it out. Okay? I know it's hard that you don't want to hear something like that, but that's basically like, I think because the fundamentals are bullish, everything's bullish from a long-term perspective. The most I think it could go down, the most bearish, short-term projection that it could go down to is right around 650. Now, we take a look at these weekly charts, and we see a divergence now in the weekly chart in Micron. Okay, you see how the fast line is now turned down. Okay, now there's no divergence on the 310 oscillator on the weekly chart. You have a high on the weekly 310. You have a high in the fast line, but now the fast line is coming down. Okay, you have a divergence, very slight, but you do have a divergence on the weekly chart. Okay, and actually, if you look at this one right there, you see a clear divergence. Okay, yeah, so you see a clear divergence in this part of the rate of change right here. So that is a clear divergence, and now it's at zero. So you have a clear sell signal with divergences in the weekly chart, which basically means from this point, it can go lower. It basically shows that momentum precedes price, and Micron can now go lower as it detaches from this Bollinger Band. Then if we look at the daily chart, it's much more clear. Okay? It's much more clear. We have stock traded up to highs at the upper Bollinger Band, making momentum highs. As it makes highs in the upper Bollinger Band and makes highs in momentum here, that is basically a free pass to buy any pullback. And as you see here, stock pulls back, and before it even touches the 20-day, it gets bought. Makes a new high, but also makes new momentum highs, and stock pulls back. It barely touches the 20-day, gets bought. We make new highs again, but guess what? As we see here in the rate of change oscillator, much lower highs. So we have a clear divergence taking place right here at this point as we get above the upper Bollinger Band, which is a classic climax top type of signal. We never really got above the upper Bollinger Band in these moves up. There was one bar that we were above it, but then it came down very quickly. It kind of pressed along with it higher. And as we get above the upper Bollinger Band, come back in, form a divergence here on the rate of change. You have a divergence here on the 310, and on the other chart, you have a divergence here on the RSI. So you have multiple divergences across multiple oscillators. That is confirmation with more confirmation that as the stock was getting higher and higher and higher, momentum was falling, and momentum precedes price, and now we welcome this down move. Like I said, it's overdue, and a big part of me personally, because the fundamental case is so strong for Micron, I kind of want it to pull back because I want to buy the pullback. So that is why the question is, okay, so now it's selling off. Okay? The sell-off is starting before momentum was falling that preceded today's price action of selling off. Now that it's selling off, okay, where can I look to buy it? So take a look at this chart here. We see that the 50-day moving average is right at 850, right around 850, 852. So that's a reasonable general price level to use as a benchmark. On that weekly chart, 650 was like worst case scenario. But I think 850 is a good level to look to buy it. And what I would look for is Micron to sell down to this 852 level, right as the rate of change, right as the RSI goes to where its previous lows were. Now, could it possibly go to the red, go down to 20? Yeah, it could go that low. But a more realistic way to try to pinpoint the low in the RSI would be to look at previous lows in the chart. And that is right around 34 to 35. So ideally, I want the stock to go to the 50-day and then look at the RSI and see how close it is to previous lows, and that is right around 35 or so. So when it gets, if and when it gets to that 50-day, right around 850, look to see if the RSI is around 30 to 35, and that is a good buy signal to look to buy shares. If it gets to 850 and the RSI isn't around 30 to 35, then wait for further downside action. Okay. We take a look at the other chart. We see how the lower Bollinger Band on the daily chart is right where the 50-day is. I love when that stuff like that happens because it's more confirmation that that is a key level that other market participants are looking at. Because at the end of the day, everybody's watching the same movie. You know, it is what it is. We're all watching the same movie. And we all have the technology to do it. So, you know, It's not like the olden days where some people got to see stuff and other people didn't. No, everybody's watching everything all the time. You know, people make trades when they're on the toilet now. So I was listening to people like, oh, it's a low trading day. No, people aren't in front of their screens. People aren't trading for the 4th of July weekend. And I'm thinking to myself, people make trades when they're on the toilet. How does it matter whether or not there's a holiday, okay? Whether they're out at the Hamptons or in the Bahamas or in Cancun or at their trading desk like me, 24/7, it doesn't matter. Everybody's watching the same movie and everybody's trading all the time. That's my opinion. If you want to disagree with me, go ahead. But, I don't think seasonality is a big, doesn't have, seasonality doesn't have the same effect that it used to. Okay. First off, there's so much algorithmic trading, and now you have AI bots trading, and human beings are trading all the time from anywhere. I don't think the seasonality aspect, has an effect. So yes, it's a holiday week. It's a holiday shortened week. Markets are closed on Friday for the 4th of July. Whether you're on vacation or you're at your office or you're on the toilet, it doesn't matter. You're going to be trading. So, or at work, a separate job that has nothing to deal with the markets. You're busy at work. You still could go on your laptop or go on your phone. Let's say you're a nurse or something, right? And you could be listening to this broadcast while you're checking in a patient, and you look at your phone and make a trade. It doesn't matter anymore. Everything is, the seasonality aspect just isn't around. I think there's a lot of boomer money managers. There's lots of boomer and Gen X money managers that were brought up in a certain way, and they just can't think different. They have a certain way they think about the markets, and they don't. It's like a lack of imagination, and I see it with, how they talk about things like the holiday trading week, and I think that same concept of lack of imagination applies to, stuff like Micron. Micron is a company that is going through a structural change, and the way that they're brought up, the way that they were taught, the way that their models say, this is a cyclical company. And that's Micron. It's been around for decades. It's a cyclical company. Memory is a cyclical business. Well, the world's changing. We're going into a new innovation cycle. And at least for a temporary period of time, for a certain period of time, we don't know what that time is, this company and other memory companies are not going to have the same cyclical aspects with their business. They're going to be more like fast growers, okay? Which is another category of Peter Lynch's different company categories, stock categories. And these boomer Gen X money managers, they just can't, get to that point where they're like, okay, well, nothing in the textbook says a company that is cyclical could become, just a fast grower uncyclical. Wow. No, it has to be a cyclical company. We cannot buy more of this stock. We'll buy it for the last day of the trading quarter before we send out, statements to our clients. So when they get the statements, they'll see that we own all these memory stocks. But we want to keep our allocation light, so we're going to de-risk, and we'll sell it the day after and get our ownership below our certain levels so we don't look like idiots to our bosses. But the day before the quarter ends, we're going to buy a bunch of memory stocks and to make our clients happy. But then the next day we gotta appease our bosses, and we're gonna sell all those memory stocks back to target weight. And that's exactly what they did this week. They bought them Monday and Tuesday. The quarter ended, okay? And Wednesday and Thursday, they've sold them. And in addition to that, you have lots of hedge funds that are selling stocks because the yen carry trade is going on, and that's a dynamic that forces hedge funds to sell stocks. So that's what's going on today. Nothing has changed fundamentally. If your long-term outlooks, fundamental outlook on all these stocks, nothing's changed. It's just dynamics of the marketplace moving the market on a day-to-day basis. Because remember, at the end of the day, it's all supply and demand. So back to what I was saying. I love when that 50-day and that lower Bollinger Band match up perfectly. Now we look at these oscillators to confirm what we see in the RSI, and the rate of change, lows, making new lows. That's not good at all. Okay, and you see here, you compare it to this, right? So the price is above this low here, this sell-off here, but the momentum is lower. That tells you we're not done going down yet, okay? So we look at another oscillator for confirmation, okay? Same principle applies with price. This price here is higher than this price here that we're comparing it to. And it's just as low, if not lower. Confirmation, we're going lower. So how low do we go? That lower Bollinger Band right around 850 is a good target. Okay, it matches with the 50-day, and at that point we can look for some type of divergence to occur in the oscillators. What I do love as I'm looking at this chart, thinking out loud, is you see how the slow line, was making lower highs, and it's been trending down before we're started selling off like we are today. Again, momentum preceding price. What I love, though, this is a key thing, and it's much more important for like a slow line on an oscillator like the 310 oscillator. So like it's the slope of the line that's very, very key. The slope of the line on an oscillator like this, specifically the slow line, is very important. And I love how it's coming down, the stock's coming down, but this slow line, it's been trending down, it's starting to level off here. And that tells me that the long run momentum is still to the upside, and that jives with the higher time frame when you look at the slow line trending up the way it is. So I'm flipping back and forth between the daily and the weekly time frame. But we go back to the daily, and that slow line is been trending down, and now it's starting to flatten out. So it shows that this, going forward, this slow line can start to flatten out and turn back up, and you can get some type of back and forth on the fast line and the rate of change, form some divergence. As that happens, the stock goes down to 850, goes back and forth, bounces around, and it is set up for its next move up into August, or so forth, give or take. So that is how I'm looking at Micron at this point. Let's take a look at a few other memory stocks to see if this is the same type of dynamic here. Let's take a look at SanDisk. Okay, so the lower Bollinger Band, it's the same thing, lows in the oscillators, and you see how you have a divergence here in the fast and the slow line, but it's starting to flatten out. That's a good sign. Let's take a look at the other chart. We have this lower Bollinger Band right around 1500, and we look at the other chart. Take a look at SanDisk. See, we have a difference here. The 50-day is at 1600 on the on this chart, and the lower Bollinger Band is 1500. So you don't always get that confirmation like you have with Micron. That's why I said I love when I saw something like that. It's like, oh, that doesn't happen all the time. It's not happening here with a stock like SanDisk. New lows in momentum. So that confirms the sell-off. It confirms that we have to go lower. I can easily see it. I see it much more likely to go to 1500 and break the 50-day than go to 1600. Now, what can happen is, as time goes on, this lower Bollinger Band can go up towards the 1600 level as it comes down, but we'll see. I would be more inclined, to, because it's the length of the move, we could easily get another move down to 1500 and actually break that level for SanDisk. And that still would not be that big of a move. I mean, the stock has had such a big move up. It makes sense to have a move down like this. That's why I said in my previous videos in the semiconductors, the momentum was falling, we're due for a correction. Well, now this is it. The catalyst is quarter end rebalancing, window dressing, and the yen carry trade. It's never, the catalyst for it is never anything that you can predict or has anything to do with the stock. But you have to be ready for that to happen. And now it's having this mean reversion process. But nothing has changed from a fundamental point of view. So you got to look for levels where you want to buy. Now, what you could do with a stock like SanDisk is like buy a little bit at 1600 or 1610 when it hits the 50-day, and then buy a little bit more when it gets to 1503, when it hits the lower Bollinger Band. So those are some options that you can do with a stock like SanDisk. Let's take a look at Marvell. That's another semi that I just love. And I don't own Marvell, but its sell-off started before Micron and SanDisk, and now it's trading down, and it's hitting the lower Bollinger Band. So you're starting, and as it's hitting the lower Bollinger Band, look, you're starting to get a little bit of a divergence forming. Okay, it's not making new lows, it's just testing new lows. So Marvell is ahead of the process. So with that said, look for Marvell to be the first one to bottom. But look for that to kind of show some strengths before Micron or SanDisk, even though they're going to pretty much all trade together. But Marvell has kind of was ahead of the other names as far as, to a certain extent, as far as getting some selling pressure. So maybe it's bottoms first. We'll see. But it's at the lower Bollinger Band. We'll see if it bounces here. We can easily get a continuation down and the Bollinger Band expands. I hope we don't get Bollinger Band expansion, but it looks like the way it hit Bollinger Band so quickly, we could get some Bollinger Band expansion. Let's take a look at in Marvell. We could get that Bollinger Band expansion in Marvell. Let's take a look at Taiwan Semiconductor. So we're just now pressing below the 20-day. We could go a lot lower before we test the lower Bollinger Band. And let's see this other chart here. We're getting closer to the 50-day. That 50-day is 419, and the other Bollinger Band was 403. So 403, 419, 419 is the 50-day. 403 is the lower Bollinger Band. That's where you can look for to sell off to, somewhere around there. We got more to go. I think we got more to go. So I would be inclined to say that Marvell is going to go down lower, and you're going to see that Bollinger Band expand, because the other names that I look at, they have further downside to go before they get some buyers that want to step in. And I think that they will get buyers that want to step in at lower levels because there's a lot of people that missed out on this rally. I don't care what they say. They're going to want to buy these stocks at lower prices. Trust me. And people that have already owned it, they want to own more. So you get a big drop in these type of stocks, you know, you're going to want to buy at those levels when they get lower. Another stock that I follow very closely is Astera Labs. It's having a big move down. And it looks like we're getting a false breakout. False breakout at Astera Labs. So we were breaking out to the upside. We traded above this previous high at Astera Labs, but now we got a false breakout. We're getting closer to the 20-day. And I think we're gonna break it. I think we could go lower, unfortunately. We'll see. But crossing below the slow line on the 310 oscillator, so it makes sense now that we cross below that slow line to go to the zero line, and we'll get crossing below the zero line on the rate of change, so it makes sense that we have more downside to go. Question is, does it stop at the 20-day and bounce or not? I don't know. We'll see. And as I am speaking, that rally that we had in the market is now getting smashed. We're selling off here. I'm going to take a look at the SPY here. That you got that reversal, and now that reversal that was a trend change from this trend down is now getting sold. So as time has gone on, this rally has now turned out to be a selling opportunity, and at this point we're getting more selling coming in faster. It makes sense for us to just go down, and probably at this point, with about 40 minutes left of the trading day, the best objective is for this to look for the SPY to go down towards, to see if it can trade to 740. That would be a reasonable expectation for it to go down to. But it may not get there. But the trend down has resumed itself. People are coming in to sell. So we'll see how things play out as we head towards the closing bell. And volatility has picked up again. It was coming down, but now it's picked up. Chugging water and coffee. I love my caffeine with coffee, but coffee dehydrates you, so I drink water. So, I think let's take a look at the Qs. See if we get confirmation in the Qs as it's selling off like it is. Yep. Okay, so got the bounce, started to get a higher high, a lower low, a higher low, And this trend reversal has completely reversed itself back into what it was doing before. And the easiest, most objectable target right now is at that 708 level where the Q's made lows as we head towards the closing bell. So selling is picking up as we go towards the closing bell, everyone. Let's take a look at the yen, because as I talked about earlier, that is a driving force of today's trading action. And let's see here if it's back. It's backing off a little bit. So, not as much selling pressure on stocks when the yen is going sideways like this. Now, when you look at the yen, the key thing that causes, yes, the direction has an element to it. If the yen goes up and keeps going up, it's selling pressure on stocks. Okay? Because of the yen carry trade. But the other element is the velocity. You get a big, sharp move like this, or like this, that is going to carry over into the stock market. It goes up, like it went up here, it goes up, it went up here. But like when you get a big, sharp, aggressive, fast move, that is what causes the selling the stock. It's not just the direction, it's the velocity. And that's big. So you got to watch the velocity. If we just trend up a little bit like this, like tick up in the yen, you're not going to see that carry through into the stocks. But you get this type of move, like from here to here in a very short period of time, boom, then it carried over into stocks, and that's when you saw the stocks start rallying, selling off after the rally from the opening bell. So the fact that the yen's kind of backing down here, backing off right now, and not really doing anything, that's a lack of selling pressure on stocks. Think of it like the yen is like a liquidity gauge, because these funds get liquidity from borrowing money in yen terms and then taking that money, converting it to US dollars, and buying risk assets, which is what stocks are. When the yen goes up, the amount of buying power, the amount of dry powder that they can get to buy more stocks and other risk assets gets less and less. When the yen goes down, they can get more dry powder when they convert the yen into US dollars to buy more risk assets. So looking at the yen is like looking at a liquidity gauge for the markets, specifically risk assets. Now, I've talked about before how Bitcoin is like a liquidity benchmark. But recently that's been breaking down, okay? Going back all the way to like 2010 up to like 2024 basically, whatever Bitcoin did is what global M2 money supply and global liquidity did. However, over the past 6 months, maybe 7 or 8 months, that correlation has been breaking down. Bitcoin has become its own animal. And there's been lots of debate, lots of discussion about what exactly is happening. Um, I don't have a clear answer for you. I heard lots of stuff, but I think one of the things that I think has a big impact on how the performance of Bitcoin is and how its correlation to global liquidity has broken down has to do with Michael Saylor and the way he's been manipulating and changing the markets with MicroStrategy or strategy now, and the way he's like using strategy to, sell bonds that are backed by cryptocurrency like Bitcoin. I think that is having a lot of mechanical, structural change on how the crypto markets and how specifically the Bitcoin markets work, and that those dynamics are changing the way Bitcoin functions and the way Bitcoin works, and that's what has affected the correlation between risk assets like stocks, the correlation between M2, global money supply, and the yen, for example. I think that has a lot of effects. Bitcoin did have a big negative correlation to yen as well, and also that strong positive correlation to stocks. But over the past couple months, it's just broken off from all these tight correlations that it had, and it's kind of become its own animal. So we'll see how it plays out. The timing for Bitcoin to be in a crypto winter is in line with what was expected. So it makes sense there. Maybe when the crypto winter ends, whenever that is, it will come back, and maybe after Michael Saylor gets blown out of strategy, it comes back and aligns with its traditional correlations and starts to rally again. We'll see. We'll see. It's kind of, curious to see how it all plays out. So let's take a look back at the yen. We're getting, as the yen has kind of, you see how the yen is kind of just leveled off here, right? It's not like you have a big selling, but it's just kind of leveled off. And you look at the S&P futures, and you get, the leveling off effect. It's kind of had an effect on the S&Ps. We're getting some buyers stepping in on this pullback. So this market's all over the place right now. Let's see if we take out that previous high and we keep this uptrend higher. Let's see.